Banana Republic, all right, where the financial instrument treatment was one of the best engineered situation. And when one talks about situations like Spico Asia has become a joking business model. And the latest one is Freedom 251. What are these companies doing? I mean, how do we allow them? And will Ind AS financial statement get certified by the auditors for that? So it should not become a question mark like, I mean, great move like Startup India, but will this also ensure that there are no startups which are scam up India? Okay. Going forward from that, the two top questions which I already discussed. So two top questions which I already discussed are controlled entity and engineered financial instruments. This alone is a big plethora of scams. And I'm sorry to be hot about it, because when one works across the globe in 7 countries and sees that, one really forgets the sentence called India mein aisa hi hota hai. It's not the fact. Duniya bhar aisa hi hota hai. And that's where IFRS and Ind AS had played the role. And those economies like Greece were hidden, came out really when they had to unearth the such kind of transparent financial statements. Same thing is going to happen in India. Fortunately, many of the people are not understanding what it means. But when that awakening comes during 16, 17 and 17, 18 preparation of balance sheets, people will be aghast. I guarantee that. Let's talk about the standards on revenue recognition and leads. It had always become a practice to boost up revenues by creative methods. Now the Ind AS implementation tips and tricks say that, are you studying every contract? So here's the next tip for the people who are implementing. So the first tip is find out all the controlled entities. And I gave you some examples how to find them out. Second tip, how the financial instruments are re-engineered. Search that. Third tip is, while recording revenue recognition, how the revenues are padded up, either up or down, in order to play with the profit figures. One needs to go into the area of how the revenue recognition has been done and how, without taking the names, one will take a simple area where IFRS 15, which is yet to come as a postponed one, Ind AS 115, talks about oil companies, oil well companies, how they pad up the revenue by showing the duplicate sale in their books, and how the new IFRS 15 provisions stop that. Funnily, the other day I was talking to some of the youngsters and I was asking them, do you know which is the accounting standard which covers trade receivables? And obviously the answer under Indian accounting standard was, obviously it's not there. Or which are the accounting standards which cover overheads? Or which are the accounting standards which cover how to record cost of sales, especially material cost? Now all these lacunas are getting gradually filled up, plugged up. For example, IFRS 15 Ind AS 115 covers marketing overheads for cost of getting order, covers cost of fulfillment, which is the cost of sales. So revenue recognition is going to be another championship. There are umpteen practices of Ind AS presentations wherein one goes for padding up the revenue and joint sales, then not recording the reward points as marketing expenses. All these are loopholes whereby, or the other side of it, how to suppress the revenue. Do the barter transactions and say Indian accounting standards have no provision for barter, so we don't record it. Or issue the stock options and don't record any employee cost and say that the guidance note is not mandatory. Height is what? Borrowing cost capitalization and exchange difference capitalization. So borrowing cost and exchange difference capitalization are one of the shockers, and Unfortunately, some of the carve-outs are remaining even into Ind AS. Right. I already said that PPE, intangible assets, with a real estimated useful life has to be done, and this must be known to most of you, because the estimated useful life matters a lot in terms of how we are getting the required pattern of wear and tear base charged to P&L account. What are we talking about? We know that component accounting or capitalization of replacement spares, estimation of useful life, all those have been made subjective. But the control comes from the fact that you don't have a scope for recording prior period expense. Arising out of that, we are talking about something as a next tip in terms of PPE, that is property, plant, equipment, which is a new name for fixed assets. What we are talking about is whether those standards are being complied with for the past. Take an example. Lot of assets due to the depreciation rate have been already depreciated, and still the assets are being useful, nicely functional. And the other side, lot of assets are already gone, but since the depreciation is keeping on going on because the rate is low. Is this a true and fair view? And that's where Ind AS financial statement put a big boost on it. Going forward, now that, let me summarize the Ind AS implementation tips and tricks for the professionals, practitioners, and one, find out controlled entities. Second, get rid of engineered financial instruments which are presented. Third, ensure PPE and inventory verification in reality. Fourth, capture every intangible asset which is getting into a mode which helps to the business to carry out. And fifth, check the NPAs on a reality assessment basis. And coupled with that, have we complied the old accounting standard itself, or is Carve itself has been certified as a Dhobi mark? These are the questions needed to be asked. All right. There are huge number of talented people which are into this arena, and they need to be working upon it and forcefully driving these Ind AS implementations in order to ensure that we are able to capture the whole situation and bring the Ind AS financial statement to the level of transparency. Now that I have covered Ind AS tips and tricks of implementation, let me go to the second position, second topic, what I call it as Ind AS for CA final students in May 16. So I'm covering it in a brief way. Ind AS for final CA students currently cover 4 parts. So the Ind AS for CA, CMA and final students, at least for May 16 exam, covers 4 areas. One is introduction to Ind AS, second is AS versus Ind AS, then Carve In and Carve Outs, Ind AS versus IFRS, and those financial instruments, Ind AS 32, Ind AS 107 and Ind AS 109, replacing AS 30, 31, 32. Apart from me, there are few more speakers who are going to deal with this in the subsequent talks. So I will cover some major highlights of the same. Introduction to Ind AS, well, we did it. So what a CA final student or a CA should expect as an introduction to Ind AS. Ind AS are India's convergent accounting standard with IFRS. And India has now taken the roadmap, which is already shown here. And the whole bill has been passed and made a part of the Companies Act by way of Companies Accounting Standard Rules 2015, announced on 16 February 2015. Thereby, the net worth based roadmap has been declared, and in a way, they happen to be now India's standard in which the account should be maintained, and more than that, financial reports should be presented. The first time adoption for a typical company, let's say which is above 500 crore net worth, talks about having a net worth above 500 crore to do current year accounts 16th, 17th as a current year as per Ind AS, then 15, 16 as a previous year's accounts, and 1/4/15 as a transition date. The standards to be used as on 31/3/17, and the transition date balance sheet conversion is from 31/3/15 as per AS to Ind AS, and all those three balance sheets and two P&Ls are required to be submitted after March 17. So 16, 17 for those companies will be the first year when no old Indian accounting standard based accounts are required to be published. Let's go into AS versus Ind AS, and let me take it a little bit standard by standard. What are the differences? For example, AS talk about revenue recognition. AS had no explicit provision of recording of barter transactions. Ind AS has it. AS has joint sale or multiple goods and services sales being recorded, which was form based. So I would say substance over form. Now the revenue will have to be allocated between the corresponding goods and or services, and along with that recorded either period based service income. Similarly, there is no chance of deferred payments. The deferred payments, is there any interest element that needs to be treated as a separate finance income? So let me summarize on revenue recognition: barter, joint sales, simple versus easy expert installations. Expert installations can be booked for revenue only after when the installation is complete. Having said that, one has to look into a primary funda of Ind AS and AS differences: substance over form. That is, don't go by the document as it looks like or as it is cooked like. COOKED, cooked like. And Ind AS forces us to get into what is the reality behind the transaction, right? Obviously, the balance sheet has a bigger focus than profit and loss account. Balance sheet is called statement of financial position, and profit and loss is called as statement of profit and loss, and a new statement called other comprehensive income comes into the picture. Thereby, we also get into, well, the carve-outs in terms of controlled entity where over old subsidiaries definition over 51%. So the number of subsidiaries and associates and JVs going to be consolidated are quite a lot. Current and non-current classification will be very strong tool to ensure to find out that those who have NPAs don't tailor them to classify as current liabilities. Going forward, substance over form, fair value. Now, fair value concept as per Ind AS 113 is also going to be a big challenge, and the shortage of valuers is going to be also a big challenge. Arising out of that, we are looking for something which is a difference between AS and Ind AS, which students will have to cover, and that is being covered by my colleagues in the remaining part. Then we come to some other standards. For example, typical differences for, now let's talk about a few carve-outs. IFRS versus Ind AS. I mean, I will name 6 straight clear carve-outs. A negative goodwill should be treated as gain on bargain purchase, other income, but Ind AS has carved out and continued that to be shown as capital reserve. Second, the carve-outs from IFRS talk about investment property, which should be allowed to be shown as cost or fair value model. Ind AS has taken a carve-out and they stick to cost model. Perhaps, I mean, this is not a reason to be quoted in any exam. Perhaps we have shortage of valuers. So how to value the fair value of the inventory can be a question mark. Government grant, which is allowed to be deducted from the assets value or shown as other income. The carve out of Ind AS says deduction from asset not allowed, only deferred other income to be spread over. Fourth carve out, ECB is treated as equity. Now this is a very dangerous carve out. External commercial borrowings are allowed to be treated as equity. That is not there allowed under IFRS, but Ind AS takes a carve out. Then next carve out is finance cost, interest cost is treated as primarily as an operating activity, operating cash flow, whereas Ind AS has taken a carve out from that and they say no operating cash flow. Now the age-long debate of cost and management accountants saying that interest is a part of cost or not, that principle comes into the picture here. And the last but not the least, the allowing of exchange differences to be capitalized. This exemption was taken up to 2020 in the Indian accounting standards. IFRS and Ind AS, IFRS has stopped it, Ind AS would have logically stopped it, but Ind AS has taken a carve out and they are going for the carve out called that the exchange difference will be allowed to be capitalized. So my dear CA finance students, here I am writing 5 points, which 6 points basically, which you should remember. What are the Ind AS carve outs? So I'm writing down here 6 carve outs. Be ready for that, and then will be covered. There are many carve outs, but I am taking those which are critical. Goodwill, IFRS says gain on bargain purchase. That is P&L item, income. Ind AS says capital reserve. Then we talk about investment property. Cost or fair value model. Only cost model. ECB to treat debt, equity. Exchange difference on principal loan repayment. Expense, capitalize. Government grants, deduct from asset or deferred other income. Only other income. Cash flow, finance cost, interest cost, operating activities. Or investing or financing. here only investing or financing. So I have shared with you introduction to Ind AS. I have shared with you AS versus Ind AS major differences like substance over form, balance sheet over P&L, controlled entity over subsidiary. And I'm sharing here carve-outs, major 6 carve-outs between Ind AS and IFRS. And now let's go into the tricky area called AS 30, 31, 32, substituted, but almost copy. IAS 32, that is Ind AS 32, Ind AS 107, and Ind AS 109. Let me give you 3 things which some of you might have already done, which are particularly the catch. 1, the debt equity classification. How shall we show cumulative convertible preference shares or irredeemable preference shares or partially convertible preference shares? These are all, I'm talking about financial assets as an investment. The asset or liability is to be booked at discounted present value. The discounting rate has to be market rate. And if the cash flows don't come to zero, there is a concept called EIR, effective interest rate. Where does effective interest rate come into the picture? The easiest example of that is subsidized employee loan, where the difference between the market rate and the subsidized rate goes to employee cost. One part. Second, convertible preference shares or convertible debentures. They are required to be split between debt and equity, because the equity option, that is option to convert, is an equity element and that is to be segregated. Third, we are booking so far only mark to market losses. Now there are change in fair value concepts where, depending upon the business model you follow, as far as debt and equity is concerned, it goes to fair value through profit and loss or fair value through other comprehensive. So these are the broad parameters based on which the non-mandatory and now removed AS 30, 31, 32 and now brought into syllabus of CA final, Ind AS 107, Ind AS 109 and IAS 32, Ind AS 32. Equity is defined as a residual, right to residual. Maninder from Karnal is calling and saying that what is ECB to be treated as equity? Now, external commercial borrowings being treated as equity when it has equity. The point is that if it has an equity element, but if it has a compulsion to repay, then it will go into the borrowings as per IFRS. But this allows you to put into the equity element. So refer to Ind AS 31, which gives a particular para, which we have sent by WhatsApp to you, para number. You can have a look at that and deal with the issue as to how to treat them. This financial instrument has got a lot of variations done, and I'm afraid that whether the derivatives and hedging treatments will be easily digestible to the CA final students, but I'm sure there are a huge number of competent youngsters, and some of them are guiding you after this, will be able to deal with those nitty-gritty issues. Otherwise, you are always welcome. Those who are registered for the webinar, we have given them free access to any queries on IFRS and Ind AS at a later date also. Right. Now, I will, before I go to the last topic called IFRS and Ind AS as a financial reporting and accounting revolution. Financial reporting and accounting revolution. Let me say a few words about it. What does this accounting revolution is aiming at? I already made a statement: transparency and corporate governance. Is it being used as a powerful tool by the professionals and practitioners? Right. So, continuing what I was discussing about, we are in the mode of transparency and corporate governance, and we are going to have a situation which is going to lead to become an accounting and financial reporting revolution. I think I passed my chartered accountancy in 1980, and what was accounting that time? I mean, I don't remember whether a few accounting standards were there and we were so much. But today is a time where a transparency revolution is coming. Reason being, we should be able to capture what was stated in our first para or rather chapter of company law, lifting of corporate wealth. And that's where I look forward to IFRS and Ind AS coming up as a accounting and financial statements or financial reporting revolution. I hope I have been able to share some of the things. We are continuing, and now I'm inviting LIC Nomura's CIO, Mr. Sarvana Kumar. You know that LIC Nomura Mutual Fund is probably the biggest fund, biggest mutual fund in India. And courtesy my request, I mean, I happen to be independent director on LIC Nomura Mutual Fund Trust Fund. And Sarvana Kumar had kindly agreed to spare the time. You must have seen his interview in yesterday's Business Standard for almost a half a page. And his thoughts are really mind-boggling and thought-provoking. So we have the privilege of welcoming him here for the session on IFRS, Ind AS, and mutual funds. Okay. While he is coming on the line, let me take a privilege of introducing the other speakers, so that will, at the time of panel discussions also, there will be a then we also have Dr. Mrs. Anjali Bhave, who is a PhD and IFRS. Then we have a champion, a world topper, Sagar Vasa, working with Mahindra and Mahindra and facing a challenge of huge number of Mahindra Group companies and dealing with them. Then we have Gaurav coming online. We also have Kinjal Shah, who is another champion from L&T and a world topper of IFRS. We have somebody specially coming from Sweden, Purna Raghavan, and she is, I call her the most talented chartered accountant of the decade. We have Smita Shetty, working in Dubai, doing a great IFRS career from Protivity. We have Tanvika Rai, who is doing her career in Switzerland, to talk about IFRS in global scenario and IFRS along with valuation and M&As. And we have Nelson talking from Nigeria. We also have, I always call her the Sonu Gupta, madam, who is the topmost best teacher of accounting, perhaps in India, Delhi surely, and India. I have not. When I see her number of students which she is capturing, it's simply amazing. Then there is my pet Surat ka child Vidhi Chheda, who is a champion of Ind AS. Then there is a star of Facebook and a company secretary and IFRS champion, Rima Jain from Delhi. And I have a privilege also to have with us a young, brilliant rank holder for all the exam of chartered accountancy, whose service tax book is getting published and inaugurated today, is going to speak on IFRS revenue recognition along with service tax implications. And we are inaugurating her book. Her name is Samiksha Jain. And those who are in service tax field must be knowing her name already. I wonder in her such a small, tiny head, how much knowledge can get compiled. Pleasure to have a CPA from USA, staying in USA, Richa Srivastava, and doing a grand career on US GAAP versus IFRS. She's going to talk. Then we have Varun Jain, who is a famous youngster from Hyderabad who had built up a great educational academy called Miles Advisors, talking on US GAAP versus IFRS. And my super duper friend Bridge, who is a champion of online learnings and IFRS and Ind AS for youngsters, how the commerce students should start right from beginning. So while we take on this huge high profiled people, you will have to bear with for some kind of gaps because they are from different location at different places, and we would be catching up with them with eagerness for listening upon various topics. You are seeing the topics on the agenda, but we are more going by who is trackable first via internet. So while this is a webinar which is happening on the global level, we are trying to be championing the whole cause in such a way that we are able to get maximum possible inputs from the whole globe and maximum number of experts. Well, some of the people who couldn't join here, I'm sorry to say, Mahesh Gaur, a famous person, has been hospitalized, so he has not been able to make it. And we have not been able to get Anusha Ramani from Germany because the signal is dropping.
Okay.
So my friend Bridge comes with a big good news of Sarvana Kumar, LIC Nomura Mutual Fund CIO. Be ready to hear IFRS and mutual funds.